Good evening, students. I welcome you all in our revisionary class, in which today we will be discussing three topics: clubbing, set off and carry forward of losses, and deductions. Deduction will also be discussed in the next session also. So some part of deduction would be discussed in this session, and the other part going to be discussed in the next session. So I believe you all must be studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So it's good to see you, technically not seeing you, but it's good to be with you. So let's see. Good evening, Soumya. Okay, good evening, Tanu. Ishan is asking, good evening, sir. I was solving past year question and it was written loss from future and option. I would like to know why this is shown under PGBP and not capital gain. The assessee is not dealing in security. So we have to see the question first. And the frequency of transaction generally decide whether it should be a business activity or whether it should be an investing activity. So there must be some information on the basis of which we can identify that why it is to be included under PGBPL. So you have sent me the question number also. Let me write it down and we will definitely I will find out this question and we will solve this question in the class also in next session. This is question number 4A of May 2025. Okay, we will take the question in our next session for sure. Nidhi is saying good evening, good evening. Harshada is saying good evening, good evening. Almas is saying good evening. So I believe you all must be studying very, very hard. Okay, so exams are near. You have to uh, put your best for that preparation. So revision must be started for all subjects, and that I always asked you that please revise twice. At least two-time revision is mandatory to have a very good knowledge of any paper, and that would technically going to give you a lot of confidence to solve those questions in the examination. So today we are going to discuss these three topics. We will take the questions from MTP, RTP, case scenario, etc., clubbing, set off and carry forward, and deduction part. And let me tell you, when you must have been gone through with these provision, you might think these are difficult, etc. But when today we will solve the question, the kind of question which is going to be asked or which has been asked in the examination, I believe you must feel that these topics are not that much difficult. So when you revise the provision, when you have knowledge of the questions, and let me tell you, if you'll practice more, your confidence will be boost up again and again. So you will see then when we are going to solve this question step by step, and if you have revised the provision before this class, that's really going to be very easy over here. Okay. So good evening, Miss Mali Sethi Varsha. Okay, so let's get started. Mani Bana, good evening. Pooja, good evening. So I'm going to share question number 1 with you from the MTP. So this is question 1 of set off and deduction combined question. And let me tell you, we are not solving easy question. We are solving those question that is from your MTP. That kind of question could be asked. And let me tell you, this kind of question has already been asked in the examination. So the first thing comes first. First of all, whenever you are reading a question, please read it very carefully. And you need to see whether do I need to solve this question as per default tax regime or normal tax regime, and what is the requirement of question. I always say to all of you every time, kindly first check what is the requirement of question. So the requirement of question either would be at the starting of the question or it would be at the end. And you can see the question says that you are required to compute the total income of Mr. Mayank for assessment year 25-26 under normal provision of the Act. So that is a very important thing. in this attempt also that we have now two regimes. So we have to be very careful before solving the question, that we should know earlier that whether do I need to solve this question as per default tax regime, or do I need to solve this question as per optional tax regime. So the question clearly said that you have to solve this question as per normal provision of the act. And you can see this kind of question could be asked for 6 marks in the examination. Now the time comes where we need to solve the question properly. Because this question relates to set off losses concept. So I told you when we have gone through with the chapter of set off of losses that there is a kind of format you can follow to solve these kind of question, and that would really going to make the solution comparatively easy. So that was question number series 2, MTP series 2, question number 4A we are solving. We have to calculate the total income. So because the question relate with the set of provision, so what I will do, whatever income information has been given in the question, I will divide it in 5 major part. Whether it would be PGBP details, either it would be capital gain details. It's a very interesting question. I will also going to ask some queries regarding this question also. So be careful. House property, salary, and income from other source. So now I am going to start reading the question, and the question says the information. Let me read once. The pension 6,60,000 rupees. So that should be fall under salary head. How much standard deduction do I need to give? Whether it should be 50,000 or 75,000. That's why it's important to know in the starting that what is the requirement of question. So it's very simple thing that in case of default tax regime, it is 75,000. In case of normal, it's 50,000. Correct, Tanu? Correct, Ishan. Well done. So in this case, there would be a standard deduction of 50,000. In some question, you might have noted that whatever amount of salary is given here, we just need to take it. We are not going to deduct the deduction. Why? Because if it has been written that income from salary, suppose this is instead of pension, it would have been written like this, income from salary, or there is a word salary computed. So whenever these two words have been given in the question, that is income from so and so, or who is using this annotation? Okay, so I have disabled it. So technically, when in the question, if the word computed has been given in the question, or income from salary direct has been given, that means standard deduction treatment has been done. But when there is only written salary or salary receive or salary per month or just that pension, so we do need to reduce the standard deduction. So in the solution, we will reduce 50,000 out of it. Clear? Now, interest from bank on fixed deposit, and the gross word has been written. What does the meaning of this word gross? We have discussed it. If there is any income which is liable for TDS deduction, remember carefully, if there is any income which is liable for TDS deduction like commission, casual income, interest income, professional fees, technical fees, etc., and the gross word has been there, that means it is before deduction of TDS. If it has been written net, then we will assume it is after deduction of TDS and we need to do the grossing up ourselves. So in this question, because directly it has been written gross, so that not the case. So this will be considered as income from other source. Income from speculation business, that would be my PGBP income. Long-term capital gain from sale of urban land. So is it section 112A or is it section 112 normal capital gain? It is under section 112. Now long-term capital loss, remember carefully. I am going to ask about this. Long-term capital loss from sale of listed shares in recognized stock exchange. STT paid at the time of acquisition and sale of share. That is under section 112A case. And that is a loss. That is not an income. You can see the capital loss. That means this figure is in negative 1,10,000. Under section 112A, it has been written. So I'm going to ask a question regarding this point when I'm going to solve this question. Okay. The more information has been given. Now the question says losses from the card games. The losses from card game, that means casual income. And under casual income, there is no expenses or loss is allowed. So this is not going to have any treatment under anywhere. Income from betting, again, the word has been utilized gross. So that is again before TDS. And that is also going to be the part of my income from other source, casual income. Some other information also given in the question. The other information has been given in the question, life insurance. Let me clear this. So the other information has been given, life insurance premium paid by check 22,500 for insurance of his life. The insurance policy was taken on 8 September 2015 and the sum assured is 2 lakh rupees. Okay. So that would be the case of deductions under section 80C or 80D. We will see one by one. This is for 80D, health insurance. This is for 80C. There is a payment of 15,000 donation in cash to an institution approved for the purpose of section 80G for promoting family planning. So that is for under section 80G. What is going to be the treatment that we will see later. Now, in the starting also, there was a very interesting information that the age is 65 years and he's a resident. So that would or that could impact my solution, that we will see what should be the impact of this case. Ishan Bist is asking, sir, if nothing written, there must be some information. If there is some income on which TDS is liable to be deducted, either it would be given in the question received, like winning from lottery received. So received means net received. So that means after TDS. Or it would be written gross. If there is no information, it's just like that income from betting. That's it. No information. Then you can take an assumption and you can write it down in your solution that whatever you have taken, the assumption. Okay. So we are going to solve this question now in this format. So there was a speculative business income that was given in the question, that was 40,000 rupees. There was a capital gain. If you see, there is long-term capital gain. Now I'm going to ask a very interesting question. Under section 112 on sale of urban land, that was 2,50,000 rupees. And there was a long-term capital loss under section 112A, that is 1,10,000. Can this loss is deductible out of this income or not? Please remind or please recall the provision first before giving the answer. Is this long-term capital loss under section 112A could be deductible against long-term capital gain under section 112? Somebody has given answer. Let me see. Pooja is saying yes. Okay. Anyone else? Jainder is saying yes. Almas is saying yes. Soumya is saying yes. Mani Vanan is saying yes. Okay. Tanu is saying yes. Kushi Gupta is saying yes. Ishan is saying yes, sir. The long-term capital loss is deductible only against long-term capital gain. Okay, Harshada is also saying yes. Shagupta is saying yes. But you are not missing something, students. There is an exemption. There is an exemption under section 112A for rupees 1,25,000 up to rupees 1,25,000 exempted from section 112A. So that means up to 1,25,000, the income would not be treated as income, and the loss will also not going to be treated as loss. So I guess you missed this provision. This exemption was there when we have gone through with the provision of capital gain. Do you remember? If you remember, I just explained you this exemption. Now tell me, what is your answer? Is it deductible or not? Arshada is saying 120. Oh, yes. So what is your answer, Arshada, now? This loss could be deductible or not. Now the real question is there. Yes or no? Astha is still saying yes. Okay. Anyone else? Pooja is saying it would be deductible. Okay. Somebody else also answered. Ishan is saying yes, sir, deductible. Well done. Very good. Yes, correct. We can deduct it because this exemption would be available at the time of calculation of tax, not at the time of calculation of GTI. That is exactly the same case. You must have remembered in case of long-term capital gain, if it is on or after 23rd of July, then we have to apply the indexation provision in case of land and building of individual HUF resident in India. And we need to calculate gain also without indexation. But in the calculation of GTI, we cannot claim the benefit of indexation. We have to calculate the gain without indexation. Only for the purpose of calculation of tax, we have to see that whether it should be beneficial to pay tax as per indexation or not. In the same way, the exemption of 1,25,000 would be available for calculation of tax, but not for the calculation of GTI. So that's a good thing for you. And so that you can deduct this loss from the income. So the long-term capital gain would be 1,40,000 rupees. Remember, this is a very, very interesting point for your examination. Examiner may give you this kind of question and you might get confused. For the purpose of GTI, that would remain the way it has been given in the question. This benefit would be given at the time of calculation of tax. Got it? There is no house property income has been given. There was pension income that was 6,60,000, out of which there would be 50,000 standard deduction. So remaining would be 6,10,000. Income from other source, there was interest of 55,000. And there is one casual loss, that is a loss from card game, etc. That is not going to be treated over here. And there was a betting income of 45. So technically we are having these income. There is no, I guess, brought forward loss, etc. So the final income is the GTI in this case would be 8,90,000. Now, because in this question we have to give deduction also. So for the purpose of deduction and calculation of tax purpose, for the purpose of deduction and tax calculation, I have also asked you to make a chart. So that would be really easy for all of you to calculate the tax. One is casual income. Whatever your casual income, you have to write it down on this part because the rate is special rate 30%. Then 112A capital gain. Then there is 111A capital gain. Then there is, I guess, 112 capital gain. And then there is income which is taxable as per slab rate. So now from my this question, the casual income is 45,000. That is going to be over here. Do I have any 112A gain left now? No. Is there any 111A gain? No. There is 112 gain. Yes, this is 1,40,000 was your this gain. Now, how much is my income which is going to be taxed under slab rate? The remaining income is going to be taxed under the slab rate, whether it's speculative business, 40,000, that is my PGBP income. The salary income, which is 6,10,000, and interest income. Interest income was 55,000. So total GTI, this would be 7,05,000. Now, why it is important to segregate these income in this format for claiming deduction, etc., or for the calculation of tax? Because whatever deduction is he is eligible to take, that is only needs to be deducted from this part. So when you will follow this format, the deductions, whatever we are going to give, cannot be allowed from this or this or this or this income. So if you use this format, the deduction, whatever those are going to be eligible for deduction under this question, only need to be given out of this income. So that kind of mistake we will not do if you will follow this format. Now you will see what were the kind of deduction was there. So life insurance premium paid by check, 22,500 for insurance of his life. The insurance policy was taken on 8th September 2015 and the sum assured is 2 lakh rupees. So how much deduction under section 80C we can claim, student? As per section 80C, how much deduction we can claim? Who just saying 20,000? Tanu is saying 20,000. Soumya is saying 10% of 2 lakh. Very good. 20,000, 20,000 Almas, 20,000 Jayender. Well done. Ishan is saying maximum up to 10% of sum assured. Correct. So in this case, that would be 20,000. Well done, everyone. Every one of you have given the correct answer. I'm really, really happy to see this thing that you all are studying very hard. You would be a chartered accountant very soon. CA Nidhi, CA Money, CA Harshada. These are going to be your name in future. Okay. So of course, because it cannot exceed 10% of capital sum assured. So out of this point, we can claim 20,000 rupees deduction under section 80CP. Now, premium of 26,000 paid by check for health insurance of self and his wife. So out of this, how much we can claim under section 80D? What is the maximum limit under section 80D in this case? Money Vanan is saying 25,000. Very good. Shagufta is saying 25,000. Very nice. Jayender is saying 26,000. Soumya is saying 25. Pooja is saying 25. Harshada is saying 25. Tanu is saying 26. Almas is saying 25. Mohammad Farhan is saying 26. Ishan is saying 26. Astha is saying 26. Now you will see, student, that some students are giving answer, or you can say majority of the student is saying 26,000. And some of them is saying 26,000, 25,000. But the correct answer need to be given after recalling the provision. When I was reading this question, I marked this thing and I told you that that could impact my answer. Mr. Mayank is a senior citizen. In case of senior citizen, what is the amount of reduction what we can claim maximum under section 80D? Now you will see. Those were saying 25,000. They are going to revise their answer. Now they are going to say 26,000. Why? The interesting thing is this. You already knew the provision. Because as soon as I read that line, you changed your answer. So that means you know the answer. Because you have already know the question that if that is a senior citizen, that 26,000 full amount is going to be allowed. So why not that kind of answer has been given when I asked this question earlier? Why you were saying 25,000? Let me tell you why. Because you just focused on one thing, that the maximum limit is 25,000. You did not recall the provision, you just recall the limit. And then that is only one limit, that is 25,000. Let me tell you, when this kind of mistake happens in the examination, and when we will come back to our home and I realize what kind of stupidity we have done, what kind of mistake we have done, that's really going to hurt you a lot. Because if we know the provision and if we mistake, that's really going to. That's why I always say, please just give 1 minute. Just give your 1 minute to the provision before solving it. Because he's senior citizen, so deduction would be full 26,000. So it's a request from my side to all of you. Don't do these kind of silly mistakes, please. Okay. Chalo, next. A sum of 15,000 donated in cash. Now what you will do? When I'll ask you this kind of query, you will recall the provision once. It will take not more than 10, 15, 20 seconds. But at least after taking 20 seconds, you have to give the correct answer. What is the fun of giving the wrong answer even in 2 seconds? No use, useless. Okay. So a sum of 15,000 donated in cash to an institution approved for the purpose of so and so under section 80G for promoting family planning. So how much deduction we can take in this case? Under section 80G, there is 100% without any limit deduction, 50% without any limit deduction, then 100% with variable limit subject to a qualifying limit, then 50% for qualifying limit. So under which category this third point is going to be included? Pooja is saying up to 2,000 cash is allowed. How can you give the correct answer? How it's possible? You just recall the provision that, okay, that has been written cash. So you just recall the provision of cash. Well done. Nil allowed because it's exceeding 2,000 rupees. No reduction, exceeding 2,000. Farhan also correct. Harshada, not given answer, yes. Okay, Tanu was also gave the correct answer. Almas is also gave the correct answer. Jainder is also giving correct answer. Shagufta also not gave the right answer. Soumya also gave the correct answer. Manivan is saying well done. Correct. So there would not be any deduction under this section. Chalo. Now tell me one thing. Is there any deduction left now in this question? We have solved these 3 points. Okay. And you can see there is the income detail in front of you. Till that I am writing down the deduction. Under section 80C, deduction would be 20,000. Under section 80D, reduction is 26,000. Under section 80G, nil, because cash payment exceeding 2,000. Is there any deduction left? What we should give in this question or not? Yes, 80 TTB, the interest deduction, 80 TTB is there. And how much deduction under section 80 TTB we can claim? It's 50,000 in case of senior citizen. Clear? So that is 6,09,000 and your total income would be now 7,94,000. Okay, tell me, is this difficult? Is this question difficult? Like that was 6 marks question and it's now 6:30. And I believe in the starting we discussed about what we are going to discuss today in reading question, was waiting for your answer. I guess technically we have taken like 11 or 12 minutes would be enough to solve this kind of question in the examination. 11 or 12 minutes. So if you're able to solve this kind of question within 10 minutes or 11 minutes, that would be really good for you. Okay. So what will happen if you practice these kind of questions? Then might be in the examination, you would be able to solve this kind of question in 5 or 6 minutes only. So that's where practice matters. Practice makes 2 benefits. One, you are able to solve the question correctly and you are able to solve that question in less time in comparison to those students, those did not do the practice properly. Okay. Sure. So that was question number 1, what we have discussed. The solution is also there. I will upload this sheet so you can see the solution also. And if there is any confusion, you can go through it. Okay. Now, clubbing question is there. Clubbing provision we have already discussed. And it's a very interesting question. In case of clubbing, the majority thing is 2 or 3 conditions you have to remember. First one, if there is transfer of income only and there is no transfer of asset, always clubbing. Clear? Second point, if there is a revocable transfer of asset or income, there would be clubbing. If there is transfer to spouse, any asset to spouse without divorce, without adequate consideration, there would be clubbing. Except in case of house property. In that case, you will become the deemed owner, etc. If you transfer to minor child, there would be clubbing. Except in case of minor married daughter, in that would case be deemed owner case would be applicable. If substantial interest in an organization in which your spouse is getting salary without qualification, there would be clubbing, so on. If you gifted the amount to your spouse or son's wife and they utilize that amount for the purpose of any business, etc., then whatever amount of the capital on 1st April of that financial year, according to that proportionate, the income of that business or the loss of that business is going to be clubbed in your hands. In case of minor child, if the minor child earned any income from his talent, skill, or physical work, there would not be any clubbing. Or if the minor child is physically disabled, as specified in section 80U, then there would not be any clubbing of any income. So that was a summarized provision of clubbing we have just gone through. And now we are going to solve this question of clubbing. Mr. Gagan, a classical singer of Bengal, and his wife, Mrs. Rashmi, furnished the following information. Now, first of all, what's the requirement of question? They are asking you to calculate total taxable income of Gagan and Rashmi for that year, and they want to pay tax under default tax regime. What is the difference in case of clubbing topic? If we are going for default tax regime or we are going for optional tax regime, there is a one difference which is important, I guess. What is the one difference you should remember when you are going for clubbing provision as per optional tax regime or as per default tax regime? That one single major difference. Because I believe when there would be a question of clubbing there, that provision will definitely going to affect your question. Because examiner wants to know whether you know that difference or not. Pooja is saying section 1032, well done. Jayendra is saying 1500 exemption, of course. That in case of minor income clubbing, there would be an exemption of section 1032, which you can claim only if you are opting out of the default tax regime. Correct, Almas? Correct, Soumya? Correct, Tanu? Correct, Mani Vanan, okay? And correct, Astha. Well done. So, now we read the question and then we will solve it on a separate sheet. Income of Mr. Gagan, professional classical singer. I can solve this question also over here. So this is Mr. Gagan income. We can take over here. And this is Mrs. Rashmi. So first point, income of Mr. Gagan, professional classical singer. It has been computed, so I do not need to do anything in this. This would be my income, 5,65,000. Salary income of Mr. Rashmi, you can see computed. So now in this case, we do not need to allowed any standard deduction, etc. Then loan received by Mrs. Rashmi from XYZ Private Limited. Mrs. Rashmi holds 35% shares of the company The company has incurred losses since its inception 2 years back. Can you give me a hint what kind of provision we need to recall to solve point number 3? Just give me a hint. Give me a hint so I can see. Are you able to understand what is the importance or what is the impact of this information which has been given in point number 3? So I would be able to recall that what kind of provision my brain should recall to understand this provision. Ishan is saying, Ishan has just given the correct answer. Very good, very good. I was just asking significant influence. Mani Vanan is saying significant influence. So Mani Vanan, significant influence matter when there is a receiving of salary to the spouse. You can see in this question there is no salary received to the spouse. And it is not significant influence, it should be called substantial interest. And that would be applicable if there would be a case of salary to the spouse. This is a loan case. Think more. You will able to get what is the exact concept which is going to be applicable in this case. Pooja has also given the correct answer. It is talking about deemed dividend. Section 222E. You might remember, student, if a closely held company, it is a private company. If a closely held company gives loans to its shareholder who is holding 10% or more voting power, only 10% or more voting power, then that loan could be treated as income in the hands of the receiver under section 222E. That was the provision. I believe you must have remember now what we are talking about. Okay. But there was a concept. The deemed dividend amount would be the amount of loan or accumulated profits, whichever is lower. How much would be the deemed dividend? The deemed dividend would be the loan amount or accumulated profit, whether capitalized or not, whichever is lower. Now you will see how beautifully this point has been drafted. Loan received by Mrs. Rashmi from XYZ Private Limited. So even if you are able to find out that, okay, this point is related to deemed dividend, and you have seen the shareholding is also increased, exceeding 10%. So now you are confident, okay, now the deemed dividend concept is going to be applicable. But now this information is so beautifully given to understand the company has incurred losses since its inception 2 years back. मतलब from the starting of this company, जब से company start हुई है 2 साल से, from last 2 years, because from the starting this company is having losses only. So if any company is having losses, so there would not be any accumulated profit. There is no reservant surplus. So because there is no reservant surplus, that means reservant surplus is 0. And loan value is 2.5 lakh. So lower would be your deemed dividend, and that would be 0 in this case. Suppose in this question, it has been written that the accumulated profit is 2 lakh rupees. In that case, 2 lakh would become income from other source in the hands of Mrs. Rashmi as deemed dividend under section 222. So in this case, income from other source under section 222E would be nil. It's a very interesting point. So I always suggest a student that please mark these kind of interesting point whenever you're going for a revision. Because in my opinion, in this question, this point is new. This kind of point you won't be able to find in other, I guess, questions or not generally. So when you are going to revise these provision or question, in this question, you just need to revise point number 3 for the purpose of examination, because all other points are simple. You must have gone through these kind of points in every question. But these kind of point, like this point, is very, very interesting. So you have to keep in your mind that this point I need to revise before the examination. Okay. Sure. Income of their minor son Gaurav from winning singing reality show on TV. Now let me see, is there any other income of their parents has been given. Cash received by Gaurav from friend of Mr. Gagan on winning the show. Okay. Interest income received by minor. So there is no other income of the parents, the Gagan or the Rashmi. So now the income of minor is going to be clubbed in the hands of the parent whose total income is higher before including the minor income. So you can see the Gagan income is 5,65,000 and the Rashmi income is 3,80,000. So the higher income is Mr. Gagan. So if anything is going to be clubbed in respect of minor child, that is going to be clubbed in the hands of Mr. Gagan. Now we will see point number 4 again. Income of their minor son Gaurav from winning singing reality show on TV. So that is due to his talent, due to his singing. So because it is due to singing, so no clubbing. Then cash gift received by Gaurav from friend of Mr. Gagan on winning the show. So that could be taxable. But the amount is less than 50,000. Under income from other source, it should be more than 50,000. So it's up to 50,000. That's why that is not going to be taxed. No taxability in case of point number 5 also. Interest income received by minor married daughter Kavita from deposit with XYZ Private Limited. So now the minor married daughter income of 40,000 rupees is going to be clubbed in the hands of Mr. Gagan. So the income of Mr. Gagan would be now 6,05,000 and the income of Rashmi will be 3,80,000. And the income of Gaurav, if the minor income we need to calculate, the income of Gaurav would be 2,50,000 rupees. I hope it's clear. And there would not be any exemption of section 1032. Why? Because we are going to solve the question as per default tax regime. So we did not give any section 1032 1,500 rupees exemption in this case. I hope it's clear now. Okay, moving forward, the solution is over here. Now this question is from your RTP. Question number 8. Again, a very interesting. Suraj, aged 40 years, submits the following information for the financial year ending on 31st March 2025. He is employed. Let me see the requirement of the question. Compute the total income of Mr. Suraj, assuming that Mr. Suraj's total income is higher than Mrs. Suraj income. That means the clubbing needs to be done in the hands of Mr. Suraj before including the income of minor child. Suraj exercised the option of shifting out of the default tax regime. So he's under optional tax regime. So section 1032 exemption activated. We will give that exemption if there's any clubbing in the hands of Mr. Suraj. Now the question says, he is employed in ABC Limited and salary earned income is 10,50,000, that is computed. So we can calculate the income over here. First is income from salary, 10,50,000. He is engaged in a speculation and a non-speculation business. I guess first we read this question properly, then we will see if there's a set of question, we will make that format, that horizontal format, okay? He is engaged in a speculation and a non-speculation business. He earned a profit from a speculation business of 60,000 and suffered a loss from non-speculation business 40,000. Okay. He reported short-term capital gain of 80,000 and a lottery winning of 20,000 rupees gross. Brought forward long-term capital loss of 30,000 from year 23-24 also there. There is set of provision is there. Now Mr. Suraj has two children, one married daughter Ria, aged 17 years, that is minor, married daughter. So that is now minor married daughter. And a son Raj, age 16 years. The interest income of Riya and Raj is 1200 and 2000 per annum respectively. He transferred a flat to Riya. So Riya was the minor married daughter. On 1st April 2024, on account of natural love and affection, this flat was let out from the date and generated rental income of 5,000 per month. So he transferred a building, a house, to his minor married daughter. And in case of house, under section 27, we have gone through with those provision. It says if there is a minor married daughter and we transfer a house property without consideration to her, in that case, we will not be treated as deemed owner. We will not be treated as deemed owner. She will be treated as the owner, but the income, whatever she will earn, is going to be clubbed in the hands of the parents. Suraj paid a medical insurance premium. So deduction also in this question. So that is a consolidated question of clubbing, set off and deduction. Premium medical 22,000 during the financial year to ensure his health, his spouse and dependent children. Additionally paid 33,000 for the health of his mother age 67 years, who is not dependent on him. He also incurred 20,000 as medical expenditure for his father, age 71 years, who is not dependent and is not covered under any insurance policy. He contributed 6,000 during the year to the Central Government Health Scheme CGHS. So you can see multiple informations are there. Or we can solve this question over here also because there is no much capital gain or loss set of provision. So salary income is over here. Now in case of PGBP income, you can see a speculation business profit is 60,000 and a loss from non-speculation business. That means normal business. We can write it down, non-speculation business, 40,000. Now my question is this, can we set off the loss of non-speculative business from speculative business? Student, yes or no? Tanu is saying yes. Very good. Ishan is saying yes. Soumya is saying yes. Well done. Almas is saying yes. Jainder is saying no. Then now he's saying yes. Mani one none. Okay. Yes. Okay. Shagufta is saying yes. Pooja is saying yes. Very nice to see this. That Arshada is saying no. Profit we can. What does that mean, Arshada? What is your answer? I'm asking whether non-speculative losses, non-speculative business losses can be set off from speculative business profit. This is my question. You have to give yes or no on the basis of this question. Kushi is saying no. Saleha, Miss Saleha Bibi is saying yes. Nidhi is saying yes. So well done. Most of you have gave the correct answer. I'm really happy to see that you are all going to clear, I guess, this attempt of September. You are very much prepared. And this is really a good news for all of you. And I am also feeling good. So yes, we can set off our non-speculative business losses from speculative. So this could be after setting off, my income would be 20,000 rupees from speculative business. Now there is third point. He reported short-term capital gain of 80,000. So that would be my short-term capital gain, 80,000. And income from other source, in that there is casual income, that is 20,000 gross. brought forward long-term capital loss of 30,000. So we all know that the long-term capital loss can be set off against only the long-term capital gain income. And in this question, we do not have any long-term capital gain income. So this loss need to be carried forward for next year if the return has been filed up to due date. Now the information regarding the children, you can see this income is going for clubbing purpose and this house income also for clubbing purpose. So first of all, the income from house property, we will solve point number 6. Income from house property, that is rent is 5,000 per month. So the GAV would be 60,000 and 30% standard deduction, that would be 18,000. That would be 42,000. We are calculating RIA, clubbing income. So this is income from house property. So that's going to be taxed in the hands of his parents under income from house property. 42,000. RIA is also having some interest income. Interest income of RIA was 1,200 rupees. That is income from other source. We reduce 1,500 exemption from this. So my income from house property would be 40,500 and income from other source would be 1,200 in this case. We can include this income from other source under over here also. Just to show the clubbing income of Miss Ria, we just combine this. That would be 41,700 rupees, the income of Ria, which is going to be clubbed. In case of income from other source of his son Raj, the income was 2,000 rupees. Interest income, clubbing Raj. He can also claim the exemption in case of Raj income, that is 1,500 rupees. So the taxable income from other source, interest income in case of Raj, we can show under income from other source also. Wherever you can show, that would not affect the answer, of course. So after doing all this, now my gross total income would be, the gross total income after doing all this would be 11,37,000. Sorry, not that. It would be just a second. It would be 12 lakh something. Just a second. This would be 12 lakh 200. This would be my GTI. Now the deduction part comes into play under section 80D. So how much would be the deduction in this case under section 80D? We have to see how much would be the deduction in this case. So the provision says Mr. Suraj paid a medical insurance premium of 22,000. In case of section 80D, you must have gone through with the provision. This is for parents as well as for our family. In that example, section 80D, we have to calculate for himself, spouse and children, and the other part is for parents. In case of himself, spouse and children, you will see he has paid 22,000 rupees. That is going to be allowed. In case of parents, whether dependent or not, does not make a difference. There is an insurance policy of 33,000. And for his father, there is no insurance possible. So he made some expenditure. For that, 20,000 also could be claimed. Under section 80D, the total would be 53,000. But maximum we can claim in parents category, if they are senior citizen, that would be 50,000. The CGHS scheme payment also we can include in this category. So that would be 28,000. But the maximum we can claim in this category would be 25,000. So total 80D deduction in this example would be, student, 75,000. In my opinion, that is a very good question to understand section 80D deduction also. So what I should do? I need to mark it like this. For the purpose of examination, this is really important point. Clear? Harshada is saying speculative profit can be set off with non-business I means. Let me tell you, Harshada, this sentence is wrong. Profit cannot be set off. Losses set off. So always read this provision like this. Losses of other than non-speculative business could be set off from speculative profit. So profit is not going to be set off. Profit is not going anywhere. Profit is there. The loss need to come and set it off himself. Okay. CGS scheme could also be for parent, but it is not mentioned, and parents limit has already been exhausted. So for the purpose of maximum benefit, what we are going to give to this assessee, we have considered that scheme into himself category. Otherwise, this 6,000 would be useless. Okay. That was RTP. You can find it out the solution of this question from the RTP, or I'm going to upload the solution from that RTP also. If you want, I can show you the solution. This is the question, what we have just discussed from this question. Clear? So you can go through with this. I will upload this part of the solution on the portal also. Moving ahead, we have completed our RTP and MTP first and second series. Now we are going to discuss case scenario cases. One by one, we will discuss these cases. You have a doubt in this RTP question, MCQ part 5. Let me write it down, Ishan. We will discuss whether it's regarding deduction, set off, or clubbing, or it is regarding for some other. RTP MCQ part 5. Taxable income. So we will discuss that part in our last revision part, because in the last session, we have the topic of computation of total income and tax. So if you have that query in that taxable income question, then we are going to take that question in our last session. Okay. Now the case scenario basis, 13 was for TDS. We are going to solve it from case scenario point number 15. And that is regarding clubbing. Mr. Rajesh gifted 15 lakh to his wife, Ravi, on her birthday on 23rd February 2024. Ravi lent 6 lakh out of the gifted amount of to Karuna on 1st April 2024 for 6 months, on which she received interest of 30,000 rupees. So what is the requirement of question? Let me see this, because it's a MCQ based question. So the first point is asking, in whose hand the interest income received from Karuna and interest on fixed deposit in the name of Ria would be included. So first question is this. So to answer this MCQ, we have to read the full question because all MCQs are interconnected. So the first paragraph is giving you this information that there was Mr. Rajesh. He gifted 15 lakh rupees to Ravi, his wife, on 23rd of February, does not matter. Ravi, out of this 15 lakh, 6 lakh, Ravi lent to Karuna. And Karuna paid 30,000 rupees interest to Ravi on this loan. Now, the first question, if you see in the MCQ, is regarding this point that whatever amount of Karuna has been given as interest, in whose hand that is going to be taxed. Okay, this is the first thing. The said sum of 30,000, whatever amount she received, Ravi received this 30,000 amount, was invested in shares of a listed company on 18th October 2024. So from this amount, Ravi purchased shares of so and so company, which has been sold on 25th March 2025. So it's a short-term capital gain and the selling price is 66,000. The purchase price was 30,000. So there is a short-term capital gain of 36,000 in the hands of Ravi. Clear? The balance amount of gift was invested on 1st April 2024 as capital. So Mr. Rajesh has given 15 lakh. Out of that 15 lakh, 6 lakh she has given on land it to Karuna. From that she earned interest income. First income of Ravi. Then this 30,000 has been invested to purchase shares of a specific company and it has been sold for 66,000. So Ravi earned the second income of short-term capital gain. I'm just finding out the information because when we will go for MCQ, we will have all the information regarding this question. Now the balance amount of gift. So out of 15 lakhs, 6 lakh has been lent to the Karuna. So the balance amount is now 9 lakh. This balance amount of 9 lakh has been invested in on 1st April 2024 as capital by Ravi in her new business. In case of clubbing, we have gone through with the provision that if any amount has been taken from the spouse and that has been utilized for the purpose of any business, then the proportionate amount of loss or profit of that business going to be the clubbed in the hands of the transferor or the person who donate that amount. She suffered a loss of 22,000 in the business in financial year 24-25. So now the third income of Ravi is PGBP. We are not discussing right now whether it's going to be clubbed or not. We are just finding out the income from the specific transaction. Now Ravi is working with a private company as a salary executive at a salary of 62,000 per month. So now the fourth income information of Ravi is salary income. That is 62,000 per month multiplied by 12. So that Ravi salary would be 7,44,000. Abhi standard deduction we will see whether we need to calculate tax as per default tax regime or normal. Okay, she paid 3,500 rupees per month towards tuition fee for her daughter Ria, studying in St. Thomas School, Mumbai. So that would be for the purpose of section 80C. Now talking about Rajesh. Rajesh is working within MNC. So now Rajesh incomes. MNC on a monthly salary of 64,000 rupees per month. So that means Rajesh monthly income would be, yearly salary would be 7,68,000. He has gifted 1,25,000 to Ria. Ria is his minor daughter on her 13th birthday. This amount is deposited as 2-year term deposit with SBI Bank in her name, on which interest of 11,500 is earned during the previous year, 24-25. So now the third income is of Ria, interest income. The question would be in whose hand this is going to be taxed. Both Mr. Rajesh and Ravi wants to pay tax under default tax. So that means section 1032 exemption gone. Standard deduction from salary is going to be 75,000. Based on the above fact, the case scenario, choose the most appropriate answer to the following question. Now you will see the first question, first part is very simple to answer. In whose hand the interest income received from Karuna is going to be taxed. But the second part, interest on fixed deposit in the name of Ria would be included in whose income. So to find out in whose head the Ria income is going to be clubbed, we have to calculate the parent's income first. Only after that we would be able to find out the income of Ria is going to be clubbed in whose hand. Before that, let me tell you, any amount which has been gifted by Mr. Rajesh to Ravi, and out of that amount, whatever income she is earning is going to be clubbed. So technically, this 30,000 is going to be clubbed in the hands of Rajesh. But when the amount of clubbed income has been invested into earn some other income, then there is no clubbing. So this 36,000 rupees is going to be the income of Ravi only. That is not going to be clubbed. The accretion on the income which has been due to the clubbed income is not going to be clubbed again, except in case of minor child. So this is going to be clubbed. This is not going to be clubbed. The amount invested in the business and whatever amount of loss has been incurred, whether loss or income, that is going to be clubbed. Salary, of course, not going to be clubbed. This is going to be taxed in the hands of Ravi. So now we will see what is the income condition in the hands of Mr. Rajesh and Ravi both. So in case of Rajesh, you can see there was a salary income, 7,68,000. Then reduction, 75,000. The interest on loan, that 30,000 is going to be the part of his income, and his PGBP loss would be 22,000. Can we set off the PGBP loss from interest income under default tax regime? Yes or no? Can we set off PGBP loss, which has been due to the clubbing, out of the interest income, income from other source? Is it allowed or not allowed? Nidhi is saying no. Jainder is saying yes. The correct answer is, somebody else also answered this. Let me see. Pooja is saying allowed. Sachin is saying allowed. Well done. Tanu is saying allowed. Soumya is saying allowed. Shagaf income would be 7,01,000. Technically, gross total income. He's under default tax regime, so that would be the total income also. Now, for the purpose, from the point of view of Ravi, the salary has been given in question was 7,44,000. The standard deduction is 75,000. So the balance capital gain, short-term capital gain would be her income. That is 36,000. So her total income would be 7,05,000. So she is having the higher income. So the amount of 11,500 rupees, there would not be any clubbing that is going to be taxed in the hands of Mrs. Ravi. So Ravi total income would be 7,16,500. We have solved this question. Now we will see as per MCQ what would be the correct answer in case of different MCQ. So the question was, in whose hand the interest income received from Karuna and interest on fixed deposit in the name of Ria would be included. So Karuna interest is going to be taxed in the hands of Rajesh, and Ria income is going to be clubbed in the hands of Ravi. The correct option is option number D. Interest from Karna to be included in the hands of Rajesh, and the interest going to be taxed in the hands of Ravi. Okay, the second point. In whose hand loss from business and capital gain would be included in the assessment year 25-26? Assume that capital invested in the business was entirely out of the funds gifted by her husband. So we have solved this part. Tell me the correct option. What should I have selected? They are asking capital gain in whose hand taxable and business income in whose hand is going to be taxed. Almas is saying C. Kushi also saying C. Tanu is also saying the correct answer. Very good. C. Sachin also gave the correct answer. Jayendra also saying the correct answer. Ishan has given the correct answer. Shagufta, well done. Pooja, well done. You all are going to be CA very soon. All answers are correct. Of course, we have seen that the loss of the business going to be included in the hands of Rajesh and capital gain in the hands of Ravi. What would be the total income of Mrs. Ravi for the previous year 24-25? So we have just calculated it, and that was the option number 1. And what would be the total income of Mr. Rajesh? The option number, I don't know why it's A, B, and B and C. That would be the D, I guess. That would be the D. That would be C. Must be a printing mistake. That would be your correct answer. They have the solution also. This is for return filing and advance tax. We will take that in next session. Then we have our case scenario. That is for TDS, set off and loss. Yes, this is for us. We will solve that question. But I guess now there's a time of a short break. Let me see if there's any query. Tanu gave the answer also. Manivan Karan is also gave the correct answer. So, Nisakji, can we go for a short break? Okay. Can we continue, Nisargji? Welcome back. Welcome back, everyone. I believe you must have taken your tea, coffee, etc. So we were discussing the provision of clubbing, carry forward, and set off, and deductions part also. So we have solved the. Okay, there is some query. Soumya is asking, sir, income of on a creation of minor married daughter will be clubbed in the hands of parents? Yes, except in case of minor child, accretion is not allowed. But in case of other than in case of minor child, all incomes are going to be clubbed in the hands of parents. $80 DDB is for a year or per person. $80 DDB is for, I guess, medical treatment you are asking. And that is for some individually person. An assessee can claim maximum benefit of that much amount, which has been mentioned section 80DDB. So it is not how many upon how many person we are taking it. For the purpose of this benefit, we can claim the maximum benefit of 1,25,000 or 75,000. That is in case of handicapped person. Yes, 80DDB is for handicap. Correct. That's for medical treatment you are asking. Yes. So in case of medical treatment, the maximum deduction you can claim is for 40,000 or 1 lakh rupees. So it does not depend upon how many person for you can going for the medical treatment, but as an assessee, you can claim the maximum benefit of 40,000 or 1 lakh rupees. So in a TEEA, if there is a let out under old provision, then if there is no loss or loss up to 2 lakh, then 24B. And if there's a loss more than 2 lakh, then up to 2 lakh in 24B, and balance in 80EEA or 80EE. Yes, up to maximum 2 lakh rupees interest you can claim under income from house property. Balance you can claim under section 80EE or 80EA as per the provision of those section. If you satisfy the condition, the amount of loan limit, the sanction date limit, or the property value. Just in case of section 80EA, it is 45 lakh rupees property value, etc. So if the time duration, if the amount of loan, if the property stamp duty value limit has been satisfied, then the balance interest over and above 2 lakh rupees, you can claim under 80EA or 80EE. Shagupta is asking something. So if any person not covered under medical claim policy, then how can he take deduction for the medical expenditure? Section 80D says this, that if some person has no medical insurance policy, and if he done some expenditure on medical treatment, then for that specific expenditure, he can claim the benefit under section 80D. Moving ahead. So case scenario 17, we are going to discuss. Okay. You can see Chanchal age 45 years provides the following data of her gross receipt for the financial year 23-24. Let me tell you, in this question, a very small part is related to set of provision, and we are going to solve that part only because other is for capital gain, etc. And I believe the faculty which has been taken the heads of income must have already solved this part of the question. The brought forward long-term capital loss from unlisted shares of financial year 23-24 has been given 5,50,000. The long-term capital gain loss. So the long-term capital gain can only be set off against long-term capital gain. So long-term capital loss can be set off against long-term capital gain only. Now the question which is relevant for our topic is question number 2 only, what we are going to solve. Sorry, it's not 2. 2 is for TDS. This is Question number 4 is relevant for our purpose. Yes. It says, what is the amount of loss which can be carried forward to assessment year 26-27? Assuming that business income is 45 lakh and income from profession is 25 lakh for the previous year 24-25. So you will see for the previous year 23-24, the income has been given for the purpose of business is 1 crore 5 lakh. And for the purpose of profession, it has been given 47 lakh. For 24-25, the question says, suppose it is 45 lakh and 25 lakh rupees. So now you will see the total business income for this year is 70 lakh rupees. And the business losses during the year, the current year business losses, Chanchal incurred a loss of 70 lakh rupees while trading in the agricultural commodity derivatives. So the loss is 70 lakh rupees from the derivative that does not fall under speculative business. So this loss of 70 lakh, which is due to the derivative of agricultural commodities, can be set off out of the business income of current year. So there would not be any business income remaining over here. Now the long-term capital loss of 5,50,000 cannot be set off against any other income except long-term capital gain. So this needs to be carried forward only. So out of these options, the correct option is option number A. 550 under section 74. To understand this question more clearly, I would suggest you to kindly read this question, as I believe you already solved this question in the heads of income revision class. So I believe you must have already gone through this question. So you would be able what we are doing under set of concept. So because the income has been changed, the current year income has been supposed it's 70 lakh, then we can set off our business loss of 70 lakh. But the long-term capital loss we need to carry forward in this case also. Astha is saying, but sir, in 24B for let out there is no limit. So why 2 lakh rupees? Astha, in case of section 24B, if the property is let out, then there is no interest limit. That is correct. You can claim as much amount of interest you want to claim from a let out property. But the maximum amount of set off would be maximum 2 lakh rupees. Other than that 2 lakh rupees, you cannot take the set off benefit. Now, what is the use of claiming the benefit of that interest exceeding 2 lakh rupees? So the excess you can transfer to deduction because we have to solve the question which is most beneficial to the assessee. So you can exhaust the limit of section 80EE or 80EA if that is applicable. The remaining amount of interest you can claim under section 24B. Suppose there is 5 lakh rupees interest under section 24B. And we are also eligible to claim 80EE deduction, which is 1,50,000 maximum. So out of that 5 lakh, it is suggested that you should transfer 150 for 80EE to reduce your gross total income. And the balance 350 you can claim under section 24B. So out of that, if any amount has been left, that could be a income loss under that house property, or you can carry forward it. So for the benefit of assessee, that is suggested that if there is applicability of section 80EA or EE, the amount of interest you should or you could transfer to that deduction first, then you can claim under section 24B. If it is exceeding 2 lakh, okay. Next is, this is for clubbing and deduction part. Question number 18, point number. This point is for clubbing purpose. Further, his son Master Dhaval, aged 15 years, has also earned the following income. First of all, we have to see whether He is under default tax regime or not? And he is opted out of the default tax regime. Income from quiz competition and interest on fixed deposits. Can you tell me, out of these two income, either both going to be for the purpose of clubbing or only one is going to be added for the purpose of clubbing, or either there would not be any clubbing? So what is your answer in respect of A and B? Either both going to be clubbed or any one is going to be clubbed or no income is going to be clubbed out of these A and point. Or you can tell me just the answer that how much income is going to be clubbed. Okay, money one is saying 9,500 clubbing. Okay. Tanu is saying 9,500. Pooja is saying only B would be clubbed. Almas is saying 9,500. Interest, uh, Aksa Banu is saying interest is going to be clubbed. Well done. Sachin is saying 9,500. Kushi is saying 9,500 with exemption also because we are out of the default tax regime. Well done. Asta is saying only FD income as per quiz competition about KBC example. It is not KBC, it is a quiz competition. If it would be a KBC, that will be a winning from competition. It's not winning. If it would have been winning, that is going to be clubbed because that could be a casual income. Shagupta 9,500, Soumya 9,500 after deduction of exemption. So correct, out of this 8,000 rupees is going to be clubbed. This is not going to be clubbed. That would be the part of Mr. Dhaval income. This is going to be clubbed. Now let's see what is the question. What is the quantum of income of Mr. Dhaval which is to be clubbed with the income of Mr. Abhishek? If any, assuming that income of Mr. Abhishek is greater than the income of his spouse, the correct answer would be option number B. Well done. Now, what is the amount of deduction allowable under section 80C to Mr. Abhishek? Now we have to find out how much amount of deduction Abhishek can claim under section 80C. So for that purpose, we have to see what is the provision for deduction over here. He also furnished the following details of investment payments made by him during previous year 24-25. First is 3-year post office time deposit, contribution to PPF, tuition fee for 3 children in Bharati Senior Secondary School in Delhi per annum, 20,000 per child, and subscription to NHAI redeemable bond after 5 years on 16th March 2025, 2 lakh rupees. So out of these 4 investment, how much deduction he can claim under section 80C only they are asking. So please do not give the answer of 80 TTA or TTV. We just need to know out of these 4, which deduction would fall under section 80C. A, B, C and D out of these 4. Tanu is saying total 95,000. Okay. Anyone else? You have 4 options. Whether it would be 1 lakh or 120 or 95 or 75. What is the correct answer? I would like to know. Question in front of you. Soumya is saying 75,000. Ishan is saying B and C. Okay. I want the total amount as an answer. Out of this A, B, C, and D, what is the total amount we can claim under section 80C? Okay. Now Ishan is saying 75,000. Aksa Banu is saying 75,000. Almas is saying 75,000. Well done. Khushi is saying 75,000. Jaindra is saying 75,000. Very well done. Somebody has also answered. Shagupta also saying 75. According to Pooja, it's also 75,000. Well done. Correct. So 3-year post office time deposit would not be eligible because that should be at least 5-year post office deposit scheme that is eligible for 80C deduction. Contribution to PPF would be eligible, of course, 35,000. And maximum for 2 children, we can claim the tuition fee benefit. So per child, it's 20,000 per annum. So for 2 children, we can claim out of this is maximum 40,000. So this 40 and this 35 is going to be allowed as 75,000 deduction. This is also not eligible for the purpose of deduction under section 80C. Sachin also said 75, well done. And Manivanan is also saying 75, well done. Moving on ahead. Next case scenario is case number 21. Return filing and deduction topic. And in this point, the question is asking how much deduction is available under chapter 6A. So when the question asks deduction chapter 6A, then we have to give the answer of total deduction from section 80C to 80U. So it is also important to see what deduction is the requirement of the question. Is it only section 80C or chapter 6A deduction? So for this purpose, we have to go through with the question. We will take out only that amount on the basis of which we can find out the deduction amount. So Mr. Rajan, age 62 year, an Indian citizen, reside in Delhi. His wife Sheetal and daughter Ria also reside with him. Ria, age 16, is studying in 12th standard. EAV, Rajan left for employment, etc., etc. Gone outside India, September, working. So there is this information is relevant for the purpose of deduction. He paid tuition fees of 1,80,000 for Ria's education in DAV school. First important information. This is for section 80C. Then, apart from that, Mr. Rajan also earned professional income, no reduction concept. During the year, he also earned interest from his Indian saving bank account to the tune of 12,000, and interest from fixed deposit with nationalized bank is 45,000. So we need to see the age. The age is 62 years. And I guess in this case, he became the resident of India. So the total interest is 45 plus 12. That would be 57,000 rupees. And because he is a senior citizen, so he can claim 80 TTB up to maximum 50,000. And out of this 180, he can claim 80C maximum is 1,50,000 rupees. No other provision regarding the deduction point, and he's shifting out of the default tax regime. So the total amount of deduction he's eligible would be 2 lakh rupees. And that would be our option number D. It's a simple question. Next is scenario number 24. This is 2 and 4. Scenario number 23 we need to discuss first. Yes. So this is again a good question regarding clubbing and deduction. Mr. Akash had bought a residential house worth 2.5 crore at South Extension, Delhi. We have to solve two questions. Question number 2 and 4. And the question number 2 is what is the amount of deduction under section chapter 6A? So we have to find deduction under section 80C till 80U. How much deduction we can claim under section 80C up to 80. Then the point number 4 is regarding in whose hands would Sia's rental income from house property at Haryana be taxable and how much income would be taxable? So for these two questions, we have to find out the relevant information out of this question. So Mr. Akash had bought a residential house worth rupees 2.5 crore, South Extension, Delhi, house on rent to Mr. Riaz. The property was funded through loan from PNB. The interest due from financial year so and so is 25 lakh rupees, out of which he paid 20 lakh during the year. Mr. Akash then took a loan of 1.5 crore from SBI so and so for construction of first floor and house for self-occupation. The construction is in progress on 31st March 25. So no relevant information out of this paragraph for the purpose of deduction or for clubbing purpose. The Akash start repaying EMI due to SBI. During the previous year 24-25, he repaid principal amount of 25 lakh rupees and 5 lakh to PNB and SBI respectively. So can you tell me, is there any deduction available for the principal amount of repayment of house property? And if yes, for how much amount and in which section? If you know the section, then you can tell me the section and what amount of deduction we can claim for the repayment of principal amount for a housing loan. Let me see the answer. Tanu is saying 80C, 1,50,000. Well done, Tanu. Jendra is also saying 80C up to 150. Very well done. 80C 150 Kushi. Almas 80C 150. Well done. Astha is saying 80C maximum 150. Very well done. So out of this principal amount of repayment under section 80C, we can claim 1,50,000 rupees. Money, Vanan is also saying 80C 150. Pooja is saying 80C and Shagupta is saying 80C 150. Well done. So out of this information, we have taken out 80C deduction. The interest paid of 8 lakh to SBI out of 10 lakh being interest due from the period of so and so. So that would be the part of income from house property. Now Mr. Akash owns another house in Haryana. He transferred that house to his minor daughter, Miss Sia, on her birthday. Remember, she's not married. She's just a minor daughter. So Mr. Akash transfer a house to her minor child. And because she's just a minor child, so in that case, Akash becomes the deemed owner of this house automatically under section 27. So clubbing is not applicable. Whatever income would be generated, that would be treated as the income of Akash himself. Okay. Miss Sia gave the said house to the local panchayat from September 24 at a rent of 5,000. So this income is going to be included in the hands of Mr. Akash under house property head from September till March. So from September till March, the income would be 7 months. That would be 35,000. No municipal tax, 30% deduction, 10,500. So that would be 24,500 rupees. Akash total income for assessment year is higher than the Mrs. Akash total income for assessment year 25-26 is higher than that of Mr. Akash. This is the first time when Miss Sia has any source of income. So in this case, clubbing provision would not applicable. So because the question says that Mrs. Akash income is higher than Mr. Akash, so you might be thinking that this much of amount is going to be clubbed in the hands of Mrs. Akash. No, because that is a case of deemed owner. In case of deemed owner, clubbing provision does not applicable. So this income would remain the income of Mr. Akash only. It is not going to be clubbed in the hands of anyone. Now, from the information given above, we have seen that there was deduction under section 80C. Question is yet to be completed. Mr. Akash bought electric vehicle worth rupees 50 lakh Is there any deduction for electric vehicle, student? Any deduction for electrical vehicle? On loan from BSM Bank, which is sanctioned on 1st April 2022. BSM Bank charge interest of 7 lakh on electric vehicle for previous year 24-25. Akash has also taken loan from ABC Bank for his daughter's higher education. He paid 50,000 as interest to ABC Bank. He also paid mediclaim of 20,000 to New India Assurance Scheme for ensuring his health via check. So for interest on higher education, we have section 80E. For medical insurance premium, we have section 80D. So what section we have for electric vehicle loan? Let's see. Mannika Manini Banan is saying 150. 80 EEB, Asta is saying, well done. So what are the specific condition of section 80 EEB? There are technically 4 conditions which we need to satisfy for claiming section 80 EEB. So can you write it down, those specific 4 conditions in short? There is some sanction date should be there. There is from which organization we need to take the loan. 80EB, Shagufta is saying 150, correct. 80ED, Manni Vanan is wrong. It's not 80EED, it's 80EEB. Almas is saying correct. Kushi is saying loan sanction between date is 1st April 19 to 31st March 2. What is 2? It is from 1st April 19 till 31st March. What is the correct answer, Kushi? 23. Well done, correct. Typing mistake ho gayi hai, Manni Vanan say. It's okay, it happens. Jendra has given the correct answer of section. For electric vehicle, Tanu has given the correct answer, section 80EEB. Is there any maximum limit of the amount for which we can purchase that electrical vehicle? Ishan Bisht is saying yes, sir. Soumya is saying 80EEB deduction, loan between 1st April 19 to 31st March 2023. Maximum limit is 1,50,000 we can claim. Mohammad Farhan also saying that. Loan sanction from Sachin is saying 1st April 19. So the basic 4 is this deduction is available to an individual for the purpose of course, electric vehicle. The loan sanction date is 1st April 19 till 31st March 23. The 4th loan is from any financial institution or bank, and the maximum limit is 1,50,000 rupees interest you can claim. Clear? Most of you have given the correct answer. I am really happy to see that. Shagupta has said yes, of course, the date is correct. Loan should be sanctioned from financial institution only for individual. This need to be remembered. Because what happens if there is a question of partnership firm? And suppose in that question, if it has been mentioned that partnership firm has purchased an electrical vehicle from a bank and the interest has been paid 1 lakh rupees. So we might forget that it is not for partnership firm, it is only for individual. So that is also important. Whenever we will see electrical vehicle, we will start thinking about the amount of deduction, not the provision. So please apply the provision first before going at the conclusion. Yes, Tanu, correct. So in this case, under section 80D, we can claim 20,000 rupees reduction. For 80E, it's 50,000 interest we can claim. And it's 80EEB. In this case, we can claim 1,50,000 rupees interest. And 80C, of course, we have seen that 1,50,000 benefit we can claim. So total benefit we can claim under this chapter number 6A deduction would be 3,70,000 rupees. So those were the question. Now we can answer that. The correct answer is option number C in this case. In whose hand would Sia's rental income is going to be taxed? That is going to be taxed in the hands of Mr. Akash only. That is not going to be club. That is going to be taxed due to the implication of section 27, that is deemed owner. Okay, well done. Moving ahead. So these are kind of questions that is going to be asked in the examination. Devraj is saying good evening. Good evening, Devraj. Okay, so this is question number 25. That is for 80 double J double A deduction. So it's a very interesting deduction. If there are certain number of employees and if they fulfill the specific conditions, then they could be allowed a deduction under section 80 double J double A for their wages or the salary, whatever we are going to pay them. 30% of it you can claim as a deduction. This is a very interesting question, and I am giving this question for your homework. We will take this question in the next session because we have more questions to solve in this. So that's a good question. You have to go through with the provision first, because before solving this question, I will ask the provision that what kind of or which employees need to be included for the purpose of claiming of deduction under this point. So now we are going to solve some more questions. These are from 8 model test paper also there. The model test paper is also there, 8. Out of those 8 model test paper, I have extract the question related to set off and clubbing, etc. provision. So now we are going to solve those questions one by one. So this is first question. Vishal, age 33 years, submit the information of following transaction or income during the previous year 24-25. Mr. Vishal had a house in Delhi. During financial year 23-24, he had transferred the said house to Mrs. Deepika, daughter of his brother, without any consideration. So Mr. Vishal had a house in Delhi. During the financial year 23-24, the last year, he had transferred the said house to Deepika, daughter of his brother, without any consideration. Now, read this provision very carefully. House would go back. Let me. House would go back to Mr. Vishal after the lifetime of Deepika. The transfer was made with a condition that 10% of rental income from such house shall be paid to Mrs. Vishal. Rent received by Deepika during the previous year 24-25 from such house property is 5,50,000. So we have to calculate as per point number 1 whether this income is going to be taxed in the hands of Vishal or not. So is it a revocable transfer or not? You can see the property has been transferred. So if the transfer falls in the definition of irrevocable transfer, then this income is not going to be taxed in the hands of Vishal. But if that is a revocable transfer, then the income is going to be clubbed in the hands of Mr. Vishal, because there is a transfer which is not revocable. If a transfer which is not irrevocable, in that case, that would be not regarded as technically a transfer. So according to the information given, whether it's a revocable transfer or not. So let me tell you the difference. If it is a revocable transfer, then income of that property is going to be taxed in the hands of Mr. Vishal. If any direct, indirect benefit has been taken, if any direct, indirect benefit has been taken from any property during the lifetime of the transferee, that would not be regarded as irrevocable transfer. And because during the lifetime of the assessee, the indirect benefit from that property, whether it's 10% or whatever amount, is going to be for the benefit of Mr. Vishal Bhai. So that transfer would be regarded as a revocable transfer. And once the transfer is regarded as revocable transfer, then the income from that is going to be taxed in the hands of the transfer. So in this case, Mr. Vishal income for income from house property need to be calculated. That is 5,50,000. 30% deduction, 1,65,000. And the balance amount is going to be clubbed in the hands of Mr. Vishal. So this is the income needs to be clubbed in the hands of Mr. Vishal. Now point number second. Mr. Vishal holds. Now this is very interesting. Please read it carefully. I am going to ask this question to you and you have to answer me this question with the specific reason in short. Mr. Vishal holds preference shares in Messrs. A Private Limited. He instructed the company to pay dividend to Chandni, daughter of his servant. So whether Chandni is relative or not, first of all, you have to judge it, and we know that that does not fall in the definition of relative. She is a stranger. She is not spouse, not son's wife, not his minor child. Servant daughter. Now the transfer is irrevocable for the lifetime of Chandni. Dividend receivable by Chandni during the previous year 24-25 is 4,50,000 rupees. So now in this question you have to tell me whether clubbing is to be done or not, and whatever is your answer, kindly give me a reason in short. Read it very carefully. And before giving me answer, try to recall the provision. That's why before starting this topic, I just remind you, or we just recapped the clubbing provision in a very short way. So I know why I do that, because I have just wanted to tell you that there could be a question like this. So we have discussed this point. Want to see who is going to give me the correct answer. Clubbing apply. Ishan is saying, okay. Mr. Manivaran is saying 3,85,000. What does that mean? 3,85,000. Clubbing is applicable, Mr. Money, or not applicable? And I need a reason in short, a very short reason. Okay. Who is this? Soumya is saying clubbing is applicable. Okay. Jayendra Pokle is saying it is revocable transfer, taxable in the hands of Vishal. Okay, let me see. Almas also give the correct answer. It is also irrevocable. Tanu is saying clubbed in the hands of Vishal because Chandli is not a relative and it is also irrevocable. So according to your explanation, Tanu, your answer should be that it is not going to be clubbed. I guess your answer is not going to be clubbed. Okay. Tanu is saying not going to be clubbed. Mani one is saying clubbing is applicable. Shagupta is saying applicable. I am asking a short reason, Shagupta, also why it need to be clubbed. Kushi has gave the correct answer. Very good. Pooja also gave the correct answer. It's really good to see that most of you, almost 80% students have given the correct answer with the correct reason. Aksa Banu is saying no clubbing as it is irrevocable transfer. Okay. Okay, the correct answer is clubbing needs to be done. There would be clubbing. The correct answer is clubbing. Why? Because only income has been transferred. You can see there was a point I discussed today also. That in the clubbing, there was a case where if there is transfer of income without transferring of asset, there would always be clubbing. And you can see what Mr. Vishal says. He instructed the company to pay dividend to Chandni only. He does not transfer share in the name of Chandni. If Mr. Vishal had transferred the share in the hands of Chandni as gift, etc., then there would not be clubbing in this case. But because you can see, he just ordered the company to transfer the dividend in the hands of Chandni, but not the asset. Asset is still in the hands of Mr. Vishal. So if you did not transfer the asset, if the section was there, it was saying that if transfer of income without transferring of asset, there would always be clubbing. So that's why clubbing is going to be applicable in this case also. So this income is going to be taxed in the hands of Mr. Vishal only. 4,50,000 rupees. I hope it's clear. Okay, Shagufta, now you got it. Good. Look, if you are going to revise all MTP, RTP, and this case scenario and these model test paper, 8 model test paper are there. So technically, I believe you are actually solving more than 100 question practice, and these more than 100 question comprises all kind of question, whether it's for return filing, basic concept, residential, set off, etc. So it's a very good practice for the purpose of your examination. And I told you initially that we are not solving easy question. We are solving those questions, those already has been asked in the examination. So understood? These question practice will make your preparation very solid, and you will get a very huge confidence level would be really high, because that kind of question you will find in the examination. And when there would be that kind of question which you have already solved during that practice session, so that would take all the fear of examination out of you. Sure. Now model test paper number 2 and question number 4A. The following are the details relating to Mr. Roshan, a resident Indian, relating to the year ended on 31st March 2025. You can see income information is being given. Short-term capital gain in the question is there. Loss from house property, let out. Loss from speculative, loss from card game, brought forward long-term capital loss, dividend from ABC, loss from tea business. Roshan wife Shamita is employed with Ray Limited at a monthly salary of 25,000, where Mr. Roshan holds 21% of the share of the company. Shamita is not adequately qualified for the post. So this amount is going to be clubbed also. You are required to compute the taxable income of Mr. Roshan, but we need to know whether it's default tax regime or normal. Assessment year 25-26, if he has exercised the option to shift out of the default tax regime under section 115 BAC, and you need to tell also what kind of loss is going to be carry forward. So this need to be solved under optional tax regime. Let me open this sheet in separate. This would be fine, I guess. Okay, so we need to calculate the income as per default tax regime under section 115 BAC. So we have the information because it is a question of set off and clubbing. So we will follow the format what I have told you whenever there is a question relating to set off. So the information of income has been given in question. There is PGBP, then there would be capital gain, there would be house property, there would be salary, and of course, income from other source. So in the question, the income which has been given initially, short-term capital gain of 1,50,000. There is a short-term capital gain of 1,50,000 in the question. Then we are having a speculative business income that was 50,000. Let me open that sheet. Just a second. Okay. There was a house property loss of 2,50,000. This is optional tax regime. So you know maximum we can utilize for the purpose of interhead. Maximum 2 lakh rupees house property loss we can utilize. Then in the question, speculative business income, we have loss from the card game. So the casual income loss cannot be claimed. We have brought forward long-term capital loss. Brought forward long-term capital loss for assessment year 22-23, 86,000. We will utilize it at the end after intra and interhead set off. Dividend from ABC company is 11 lakh. And now there's a very important point. It is loss from tea business. That has been given in the question, 1,06,000. There's a clubbing of Roshan's wife, Shamita. She was working in an organization in which Mr. Roshan was having substantial interest without qualification, so that income is going to be clubbed in the hands of Mr. Roshan under salary head. That would be 3 lakh rupees. And out of this, 50,000 would be standard deduction. So 2,50,000 would be the salary income in this case. Now you will see the tea business is having 60% exempted ratio and 40% taxable ratio. So the exempted part loss does not have any treatment, but the taxable part, which is 40%, do have the treatment, and that would be 42,400 rupees. Now we have a loss under normal business. Can it set off against this business? The answer is yes. We can set it off against speculative business, but there is a loss of speculative business. Sorry, not was profit. It was a loss under the head speculative business. A speculative business loss can be only carry forward. It cannot be set off against any other income except the speculative business income. There is no speculative business income has been given in question, so that is going to be carry forward loss. Can I set it off my loss from business against salary income, dividend income, or capital gain income? My business losses can be set off even against capital gain or my income from other source. It cannot be set off against my salary head of income. So I can set it off against my capital gain, and that was short-term capital gain. It is allowed to be set off. So if I will set it off, the remaining short-term capital gain would be 1,07,600. Out of this house property loss, maximum 2 lakh could be set it off. So my salary income would remain now 50,000. Casual income loss would not be treated as loss. The dividend income would be 11 lakh rupees. Now the brought forward, you can see the brought forward long-term capital loss was 86,000. And it could be set off only against the long-term capital gain. So because the long-term capital loss, 86,000 cannot be set off this year. So this is going to be carry forward again. So this is second carry forward. First was speculative business. Second is this. The remaining loss of 50,000 rupees. House property remaining loss. This is also going to be carry forward number 3. Now my GTI would be, after considering 10 lakh 70 107600, then 50,000 my salary income. That would be 12 lakh 57,600 would be my GTI. So I hope it's clear. The question. So if in case based regime not mentioned, then we have to do as per default tax regime. In my suggestion, yes, you should solve it as per default tax regime. And you should also mention it in your solution that we have followed default tax regime because the case has not been specified in the question. Okay. But in my opinion, in every question, they will mention it that how do you need to solve this kind of question. Moving further, model test question number 3. Mr. Arpan, age 35 year, submits the following particulars for the purpose of computing his total income. Sir, for case-based MCQ, do not take tension of that, Ishan. I believe those are making question paper for ICAI examination. They would definitely aware of it that student will have a confusion if they did not mention in the examination which case you need to follow. So just do not bother about it. They will definitely going to mention by which method you have to solve that kind of question. So this is ICAI. They will definitely take care of it. You don't be bothered about it. शगुफ्ता इज आस्किंग सर LTCL का 86,000 कैसे आया? शगुफ्ता क्वेश्चन में गिवन है, ये देखो आप देख सकते हो, ये ब्रॉड फॉरवर्ड लॉस था पिछले साल का, असेसमेंट ईयर 22-23 का पुराना लॉन्ग टर्म कैपिटल लॉस था। तो अगर इस साल लॉन्ग टर्म कैपिटल गेन होता हमारे पास तो हम इससे सेट ऑफ कर सकते थे बिकॉज अभी 8 इयर्स नहीं कंप्लीट हुए। सो ये क्वेश्चन में गिवन था 86,000 का, जिसे हमें वापस से कैरी फॉरवर्ड करना पड़ेगा बिकॉज इस साल हमारे पास लॉन्ग टर्म कैपिटल गेन नहीं है। ओके, नाउ Mr. Arpan, age 35 years, submits the following particulars for the purpose of computing his total income. Income from salary computed has been given 4 lakh. Losses from let out house property has been given 2,20,000 rupees. Brought forward loss from let out house property for assessment year 24-25 is 2,30,000 rupees. Business loss has been given 1 lakh rupees. Bank interest FD is 80,000. Compute. Now this is a MCQ based question. The correct option you have to find it out of these 4 options. compute the total income of Mr. Arpan for assessment year 25-26 and the amount of loss that he can be carried forward for subsequent assessment year under normal provision of the Act. So we have four options. So which option is correct? For that, we have to solve this question. We can try to solve it over here. So this is PGBP. We can make its capital gain, then house property, then salary or income from other source. So income from salary has been given in question 4 lakh. Loss from let out house property is 2,20,000. Now brought forward let out house property loss. So brought forward loss, we have write it down at a separate place. If we would have income, then we will consider that after inter and intra head adjustment. So this is brought forward assessment year 24-25. Business loss is 1 lakh rupees negative. And we are having income from other source positive. This is the information that has been given in the question. So out of this house property, maximum 2 lakh we can utilize under inter-head adjustment. You can set it off against salary. So out of this 4 lakh rupees salary, 2 lakh has been set it off and the remaining salary would remain 2 lakh rupees. Clear? The remaining 20,000 house property loss is going to be carried forward. So this is my carry forward number 1. Now PGBP losses cannot be set off against salary income, but can be set off against income from other source. So out of this 1 lakh, 80,000 we can set off against income from other source. So out of this 180,000 has been transferred over here. So there would not be any income from other source remaining. After 80,000, the remaining 20,000 losses would be again carry forward. This is my carry forward number 2. And this is also going to be carry forward because no profit left from income from house property. So house property 20,000 and 2,30,000. So total house property carried forward we can say 2,50,000 losses. And carry forward PGBP would be 20,000. And my GTI would be only salary income, which is 2 lakh rupees left after setting off house property loss. So now on the basis of this, we can find it out which option is correct. So total income 2 lakh and loss from house property 250 and business loss of 20,000. Look, first option is correct. We have seen that our income is 2 lakh rupees TI. House property total is 230 plus 20, 250 needs to be carried forward and business loss is 20 needs to be carried forward. So the correct option is option number A. Clear? Now moving on to 4th question. Mohit submit the following information for the previous year 24-25. That is income from salary. Again, because income from salary word has been written. So can you tell me whether do I need to deduct standard deduction or not? Out of this 650, do I need to reduce the standard deduction or not? Not. Correct. The correct answer is we do not need to deduct it. Ishan is saying, yes, sir, it shall be. No, Ishan. We have discussed this point today. If there is word like income from salary, income from house property, that means it's already been computed. If that is only word salary received, Then we need to deduct the standard deduction. So they have calculated income from salary. So you do not need to deduct anything out of it. Okay. Soumya is also saying should deduct. No, Soumya. We have discussed this topic today that if the income from salary what has been given, that means income has been provided to you. So do not need to deduct anything out of it. Okay. Don't do this kind of mistake. So this would be my salary income. Do not need to deduct anything. House property, profit has been given, loss from house. This is loss. That means negative sign. Again loss, negative sign. Loss from leather business, negative sign. Profit from cloth business, positive sign, positive sign, positive sign. Short-term capital loss from equity-oriented funds on which STT paid. This is 111A. Income from crossword puzzles, casual income, positive sign. Dividend gross, positive. Loss on owning maintaining, minus. Income from owning maintaining, plus. Compute the GTI and loss to be carried forward of Mr. Mohit for assessment year 25-26 under regular provision of that. Mr. Mohit has filed his return of income on 25th July 2025. Why they have given this information? Because to carry forward losses except under income from house property, you need to file your ROI up to due date. And the due date of ROI would be 31st of July 25. So they are just informing you that he has filed his ROI before due date. So whatever are the losses, if they needs to carry forward, we can carry forward it. Okay. Now we need to solve this question on our format. There is a very interesting thing in this question. I will show you. Incomes. First of all, income from salary has been given. So this is my PGBP. This is my capital gain. This is my house property. This is my salary. This is my income from other source. Now, income from salary has been given in the question 6,50,000. So I don't need to reduce the standard deduction. Income from house 1, that is income 55,000 has been given in question. House 2 loss. Loss is 1,25,000. House 3 loss. That's also 1,90,000. Then losses from leather business. So I have a business of leather. Out of that, loss from leather business 68,000. There's a cloth business profit. So cloth business is also a normal business, not a speculative. So cloth business profit is 1,70,000. Short-term capital gain under section 111A. And short-term capital not gain, it's short-term capital loss has been given in question, 35,000. When we were going through with the provision of set-off and losses, I also asked you, always use the sign of plus and minus. That would really help you to solve the question correctly and you would not get confused. Income from crossword puzzles. So that is casual income. It is 12,000. Then we have dividend income. This is 8,500. Now there is loss from owning, maintaining racehorse. that is 7,500. And there is income from owning, maintaining race bulls, 9,000. Now the interesting thing is this. You can see losses on owning and maintenance of race horse. When I was solving this question today, even I made this mistake. I set it off. I set off this loss from this income. So because that was owning and maintaining race horses, so I did not read it properly. The 10th point was race horses. And 11th point is for race bulls. There is a difference. So what I did, I set it off out of the income. And then when I saw my answer was not matching, so I start finding the mistake and I find it out that, okay, I did this mistake. So even I can do this kind of mistake. So student, be very careful. So whenever we read losses of owning, maintaining race horse, losses of maintaining, we are not reading it, it's bulls. So this set off is not allowed. This 7,500 is going to be carry forward because losses on owning and maintaining of race horses can be set off only against the income from owning and maintaining of race horses, not from race bulls or race dogs or race donkeys or race rabbit, etc. So this is going to be carry forward. This is a very interesting point in this question. Chalo, let's solve it. Now you will see the leather business loss can be set off out of this income. There is no issue. We can set it off easily. So the remaining, we are going for intra-head first. So under intra-head, after intra-head, there would be business income of 1,02,000 remaining. The short-term capital gain loss, 35,000. There is no income under that capital gain. So after intra-head, there would remain 35,000 short-term capital loss under section 111A. And we know that capital gain losses cannot be set off from any other head of income. So in that situation, this is going to be carry forward automatically. This is going to be carry forward 1. Now house property intra-head. After intra-head, your house property loss would remain 2,60,000. We are just going through intra-head first. Salary would remain 6,50,000. Casual income will remain 12,000. Dividend would remain 8,500. Owning, maintaining racehorse losses, that is going to be carry forward. And this is profit 9,000 will remain as 9,000. Understood? Now we will go for interhead. As you can see, under PGBP, there is no loss. So there is no interhead. This is going to be carry forward. Now, maximum 2 lakh out of this house property can set off from salary income. So we are going to set off this 2 lakh out of this income. So 4,50,000 will remain my salary income. The balance loss of 60,000 is going to be carry forward number 3 after interhead. So my income from other source will be remaining 12,000 plus 8,500 plus 9,000. That would be 29,500. So if we consider my income, this is my income. Now this is my income. And this is my income. So my GTI would be 1,02,000 plus 450 plus 29,500. That would be 5,81,500 rupees. having 3 carry forward. So that's the way we need to solve these kind of questions. Okay. Ishan is asking, sir, like for carry forward, we have to write that it can be carry forward to assessment year 20 dash, or we have to write for how many years it can be carry forward. Because in some question it is written carry forward to assessment year 26, 27, and in some the number of year. You can write it down normally that this loss would be carry forward for next assessment years. So that would be a easy answer in your case, because the question, if the question specifically asks that till which year it could be carry forward, that only you can mention up to this year you can carry forward. But if the question generally asks what are the or how much the amount of losses can be carry forward, then you can write it down that this loss can be carry forward for subsequent year. That would be enough. Okay. तनु कह रही है कि सर ये मेथड एग्जाम में फॉलो कर सकते हैं, बिल्कुल कर सकते हैं, बट यू हैव टू राइट इट डाउन द सॉल्यूशन आल्सो दैट वी हैव सेट इट ऑफ लॉस ऑफ लाइक दिस. सो दिस इज जस्ट द chart to make you understand. You can use it, but you have to write it down the provision also, like the way it has been solved in the question. Pooja wants to ask something. Just wait a minute, Pooja. Astha is asking, sir, please tell that in this paper, overall 40% or individually for GST and DT. Kindly send these kind of query to your board of study. Right? It's not individually because 40% you need overall. So Pooja, you wants to ask something? You raised your hand. Can we unmute Pooja? Yes, Pooja, go ahead.
Good evening, sir.
Good evening.
Sir, I want to ask, if an individual sells residential house property and got capital gain, suppose 25 lakh, and after that he purchased a new house property in his wife's name.
Okay.
Then, exemption under section 54 would be applicable or not?
Because generally it is not applicable because registry should be in your name. But I have seen there are some judgments in that specific judgments. The court has been allowed in case of spouse, etc., that if you have purchased the name of spouse, then court has provided the exemption in certain cases. But there is no provision in the act. So it is suggested that if in the question it has been written that it has been purchased in the name of a spouse, then deduction or exemption should not be provided. But in some judgments, the court on the basis of facts, that provision has been allowed. But because that is not the ruling yet, not has been specified by the act, so we would suggest that you should not allow that kind of exemption.
Means, sir, in this case, a deemed provision would not be applicable.
Yes, deemed provision would not be applicable because...
And clubbing also.
Clubbing also, no. You are asking about me the exemption case first of all. So exemption would not be applicable. Now the second question, whatever you ask, so under capital gain, you cannot claim the exemption if you have purchased the property in the name of a spouse because registry is not in your name. Technically, this is the answer of your first part. Now, if you're asking the clubbing concept, the clubbing could be applicable because for the purpose of clubbing, because you have made the payment on behalf of wife to purchase. So because the consideration has been paid by you, so clubbing would be applicable. There are two separate concepts. Capital gain you cannot claim, but in some cases, in some judgments, court and authority has been provided it. But for the purpose of act, generally you cannot claim it. But clubbing concept would be applicable. You cannot say like this that why clubbing is applicable if the exemption is not applicable. Because these are two separate chapters, and as per act, it has been clearly said that for the purpose of exemption, the house should be in the name of assessee. And for the clubbing purpose, if you have transferred any amount or property in the name of your spouse without consideration, then clubbing concept would be applicable in your case.
Means, sir, if a house purchased by spouse and any income is earned from that house, then that would be clubbed in the hand of husband, right, sir?
Yes, if the amount has been paid by the husband, if wife does not purchase from his own resources.
And sir, one more question regarding return filing, sir. Sir, if in this case uh, there is a capital gain income, sir, suppose 25 lakh rupees,
Which income?
and capital gain income,
Capital
sir,
gain income 25 lakh rupees. Okay.
and he purchased a new house in which suppose 30 lakh, and there is no total income.
30 lakh and there is no other income.
Right, sir. There is no total income exemption would be applicable and no total income, sir.
No, you are saying capital gain of 25 lakh rupees. Okay.
Yes, sir.
And now you are saying he purchased a new property for 30 lakh rupees. Okay.
Yes. Then exemption 54 would be applicable.
Exemption 54, maximum up to 25 lakh rupees would be applicable. Out of 30, you can claim only 25 lakh rupees exemption.
Yes,
Okay.
sir.
Your income
Yes.
would be nil. Correct. Total income would be nil. Yes.
So, sir, in this case, if assessee would not file his return on time, then section 34A interest would be applicable on which amount, sir?
But in this case, return needs to be filed. Under section 139(1), we have gone through the provision of compulsory filing of return. In that, the provision says if your income is exceeding basic exemption limit without giving the effect of section 54 exemption. So in this case, if you want to see that return need to be filed, yes, return need to be filed, because if you remove the exemption under section 54, 54, etc. and deductions, then his total income would be 25 lakh rupees. Remember, we have gone through with this provision.
Yes, sir. Sir, my question is, if assessee not
Did not file return
file
on
return on time, then interest would be applicable under section 234.
For the purpose of interest applicability, there must be some tax, because interest needs to be calculated on tax. So there is no tax liability because there is exemption.
Yes, sir.
So interest could not be applicable. But late fees, that 5,000 or 1,000, that could be imposed. But interest under section 234A, B or C cannot be, because we have to calculate interest upon the assessed tax. And if assessed tax is zero, then there could not be interest ever.
Yes, sir. This is my question. On which amount tax interest would be calculated? Thank you, sir.
Welcome. Any other query, students? Manivanan is saying thank you, sir. Thank you, Manivanan, to join the session. I welcome you all. Okay. Any other query, students? Pooja wants to ask something again. Yes, Pooja?
Sir, in this case, if that individual firstly transfer this property to his spouse and then sell, then, sir, section 54 exemption would be applicable.
In this case, if the assessee gifted his property to the spouse,
Yes, sir.
and then
Firstly, registry will be transferred in the name of spouse, and then he will sell that property.
But in that case, there would be a problem, na? Because spouse will get that property for zero value. So cost of acquisition would be zero. So spouse needs to pay a lot of tax. But in this case, if the property has been transferred to the spouse,
But
and
spouse is a relative, sir. And
no. Spouse is a relative. So when you transfer the property to your relative, at the time of transfer, there is no applicability of income from other source. But when a spouse is going to sell it, so spouse receive it as nil value, then cost need to be taken from the point of view of his husband. In that case, a spouse can claim the exemption. So if you want to claim exemption, you can transfer that property into the name of your spouse as gifted property. Then if
Yes.
she spouse transfer and purchase a new property, then you can claim the exemption under section 54. That is possible.
And in this case, spouse income will be nil, right, sir?
No, that we need to calculate now. How much is your capital gain? How much is sale proceed? Manjula ji shy applicable, not applicable. So in that case, in the hands of a spouse, we need to calculate the capital gain. And that capital gain income is going to be clubbed in the hands of Mr. A. Because if you transfer a property without consideration, so Mr. A would be treated as a deemed owner. Clear?
Yes, sir.
Because he is deemed owner. So whatever income will be generated from that property, whether a rental income, that is going to be clubbed in the hands of Mr. A. Whether it's a capital gain, that is also going to be clubbed in the hands of Mr. A. Again, that problem will arise. If Mr. A would be deemed owner, then when the spouse is going to purchase that property in her name, then how she will be able to take the exemption, because capital gain is taxable in the hands of husband. And exemption cannot be claimed by the spouse because she has no capital gain in her hand also. So nobody will take the benefit of exemption. You are trying to avoid the tax, but the provision has been made like this. Let me show you with the help of example so you would be able to understand it properly. Look, Mr. A was having a house. He gifted this house to Mrs. A without consideration. So what will happen? He will become the deemed owner.
Yes, sir.
Under section 27. What is the meaning of deemed owner? That registry in the name of Mrs. A, only registry in the name of Mr. A. But income tax say no, you are not the owner. We will consider who is the owner. Mr. A. Whatever income Mrs. A would drive, whether it's a rental income, in whose hand it's going to be taxed? In the hands of Mr. A. So if a spouse is going to sell this property in future, then capital gain in the hands of Mr. A is going to be calculated because he is the deemed owner. So now what will happen? Capital gain would arise in the hands of Mr. A. Suppose the property has been sold for 50 lakh rupees. The index cost of acquisition, etc., we assume it 20 lakh rupees. So 30 lakh is going to be taxed in the hands of Mr. A. So in whose hand capital gain is taxed? Mr. A. Clear? Now
Yes.
Mrs. A purchased a new property. She is thinking now I can claim the exemption. If she purchased property in her name, now tell me, yes, she is eligible to claim the exemption section 54, but where is the capital gain? Capital gain is in the hand of Mr. A. Property purchased by Mrs. A in her name. So neither she can claim the benefit of exemption nor Mr. A can claim the exemption. So that would be the case in which this is so very silly from the point of view of assessee, because even after purchasing a property, no one claim the benefit of exemption.
Okay, sir. Means, sir, according to some cases, it is applicable, but not in the.
Yes. For these kind of cases, we have to go to the court. For specific cases, for a specific reason, on the basis of fact and circumstances, court can decide. Yes, in this situation, maybe court give the benefit for the exemption depending upon the case. Suppose Mr. A is very ill. He is having a very health issues. He cannot transfer that property. So if you go to the court and prove that in this situation, we genuinely need to do this, then court may allow. But that kind of question cannot answered in the examination. In the examination, we have to give the answer on the basis of the provision, whatever in the Income Tax Act. So on the basis of special provision, court can give you that benefit, but not in normal cases.
Okay, sir. Thank you, sir.
Student, any other query? I don't see any other query. So Nisarg ji, can we close the session? Yes, go ahead. Okay, good night. Shagufta wants to ask something, sir. Rukenge kya Nisarg ji, 1 second. Okay, kindly unmute Shagupta. Yes, Shagupta.
Hello, good evening, sir.
Good evening.
Can I speak Hindi because my English is not very
अरे
well.
बिल्कुल कोई प्रॉब्लम नहीं, आप हिंदी में पूछो, हिंदी इंग्लिश जिसमें मना है। ओके, पूछिए।
अभी जो आप वो चार्ट वाला समझाए थे सर, बस
हम्म,
मुझे कंफर्म करना है कि मैं सही करती भी हूँ या नहीं कर रही। मतलब कि वो जो सारा हेड्स का इनकम दिया हुआ रहता है
जी
चार्ट में, तो हमको सारा इनकम को अलग अलग हेड्स में लिखना है। उसके बाद उसमें से डिडक्शन करना है, उसके बाद सबको ऐड करना है।
करेक्ट, बिल्कुल। आप
यही।
सेट ऑफ वाले क्वेश्चन के बारे में बात कर रहे हो, सेट ऑफ के क्वेश्चन हम सॉल्व कर रहे थे उसकी बात कर रहे हो?
यस सर, यस सर।
हाँ, तो देखो सेट ऑफ के लिए ना आप उसे हॉरिजॉन्टल बना लो, और उसमें से जो इंट्रा और इंटर ऐड होने के बाद, जब इंटर और इंट्रा ऐड हो जाए, तो जो
यस सर।
इनकम कैरी फॉरवर्ड नहीं हो रही है, जो इनकम बची है ना हमारी, जैसे हमने इस क्वेश्चन में भी किया था, देखो इन क्वेश्चंस में जो इनकम हमारे पास बच गई थी, जैसे ये वाली इनकम 4,50,000, 29,500, और ये
यस।
बिजनेस की इनकम, इन तीनों को
यस।
आप साइड में लिख सकते हैं अपने पास, 1 2 3, मतलब पीजीबीपी हेड इनकम जैसे नॉर्मल क्वेश्चन में लिखते हैं हम, इनकम
यस।
फ्रॉम अदर सोर्स और सैलरी हेड, फिर इन तीनों को लिखकर हम दिखाएंगे दैट इज माय जीटीआई, एंड इफ देर इज एनी डिडक्शन, तब उस डिडक्शन को यहां से माइनस कर सकते हैं आप, जो भी डिडक्शन एप्लीकेबल होती है। अब डिडक्शन के लिए भी मैंने आपको बोला है कि आप चार्ट बना लें, बिकॉज उससे फायदा ये रहता है कि हम डिडक्शन लॉन्ग टर्म शॉर्ट टर्म में से नहीं दे सकते, उस चार्ट से आप सिर्फ रेगुलर इनकम में से ही डिडक्शन दे पाएंगे। तो इस चार्ट के बाद आप जीटीआई अलग से शो करेंगे, ऐसे लिखकर कि पीजीबीपी हेड इनकम, अदर सोर्स इनकम एंड सैलरी हेड इनकम, दिस इज माय जीटीआई। अगर डिडक्शन है तो वो यहां से आप माइनस करके फिर अपनी टोटल इनकम शो कर सकते हैं।
ओके सर, ओके। ओके, थैंक यू सो मच सर।
ओके, एनी मोर क्वेरी स्टूडेंट्स? Okay, Nisarg ji, can we close the session? Okay, done. Good night, Nisarg ji. Yes, done.